From the heart of where innovation, money, and power collide, in Silicon Valley and beyond, this is Bloomberg Technology with Emily Chang.
I'm Emily Chang in San Francisco, and this is Bloomberg Technology. Coming up in the next hour on this Friday, President Biden doubles down on fighting climate change. We're going to talk about what exactly he has in mind and how the tech sector is being affected. Plus, the Bitcoin blues. Prices for the cryptocurrency traded around $35,000 today, near lows from last week's crash. We're going to talk to someone who's still optimistic. And school's nearly out for the summer, but for some, it was never really in. We're going to talk about the state of remote learning now that come fall, classroom doors will be open again. All those stories in a moment, but first, it was a strong day, week, and month for U.S. stocks. Our Kriti Gupta has the roundup. Kriti, take it away.
Well, Emily, thank you. You do, of course, know we're going into Memorial Day weekend, and for stocks, that meant a lot of green on the screen simply because low volume helped stocks drift higher. Really interesting to know that some of those tech stocks, those were the notable outperformers, a little bit of defensive positioning ahead of that long weekend. Green on the screen today, though, Emily, not the case on a monthly basis. If you look at the NASDAQ 100, they really underperformed in the month of May. You can really see, if we can actually just flip up the boards here, we can actually really see the fact that tech hasn't been having a very good streak. Look at the very end. In 2021, not doing so well. A lot of underperformance. That's really the story. Flip up the boards one more time. And I want to show you what the real highlight of this week was. And that was, of course, meme stock mania making a comeback as you start to see those stocks drift higher. Tech stocks, materials, industrials, some of those meme stocks doing really well. The notable outperformer here was AMC Entertainment, up 116% this week. And of course, hitting a $10 billion valuation, Emily.
All right, retail traders at it again. Our Kriti Gupta, thanks so much. President Biden is out with his first full budget proposal, detailing his ambitions to dramatically expand the size and the scope of the federal government. Part of that plan involves ramping up climate change spend across federal agency, which includes asking Congress to infuse money into government climate programs, as well as initiatives to help counter the threat with clean energy technology, zero emissions vehicles, and increased energy efficiency. For more, I want to bring in Bloomberg's Jennifer Delohe. Jennifer, thank you so much for joining us. So talk to us about some of the key elements here from a climate perspective.
Well, right. As you mentioned, Biden is seeking to ramp up climate change spending across the federal government in a way that we haven't seen certainly over the last 4 years. And it's part of his, whole of government approach to the issue. So, for instance, the president is asking for about $1.7 billion to boost the energy efficiency of homes and schools and federal buildings. He also wants to dedicate a lot more money, roughly 30% more, $10 billion worth, to clean energy innovation that's going to happen outside the Defense Department. It's really across the federal government in every agency. But to me, the EPA kind of tells the story. That's where you'll see potentially the biggest difference in terms of climate spending and overall spending on the environment. Budgets there had declined by nearly a third over the past decade, and under Biden's plan, the EPA would get $11.2 billion. It's a 21% increase, and suddenly they'd be able to hire a lot more workers, about 7.4% more just over the next year. So it's a pretty dramatic change he's envisioning there.
The president has plans to use this spending to help propel clean tech as well. How might that impact electric cars and a company like Tesla, for example?
Right. So he's got plans for spending on clean energy innovation, R&D along those lines. But he also really wants to use the power of the federal government's purse and its purchasing power to create more demand for electric vehicles. So today he rolled out basically more detail in his plans to electrify the federal government fleet. And he's asking Congress to help him put $7.4 billion behind that initiative. Basically buying up electric vehicles for the federal fleet and installing charging stations they will need over the next decade. That also includes about $2.4 billion just for the U.S. Postal Service and electrifying that fleet.
All right, Jennifer Delohe, thanks so much for giving us that update. Meantime, also in the budget, plans for cyber. President Biden proposing allocating $15 million to stand up a new cybersecurity office called the National Cyber Director, responsible for coordinating policy across the government and private sector. Let's get more details from Bloomberg's Aliza Sebanius. Aliza, talk to us about how this fits into other cyber initiatives and organizations in the federal government already.
Absolutely. So this office was stood up after it was called for by the defense bill. The big question was, would Biden's budget fund it? The office was dreamed up by this committee on the Hill known as the Cyber Solarium Commission. They thought up this office, recommended it. It got passed in legislation, and this is sort of the first we've seen of how it'll actually be funded. The office can have up to 75 people, which is part of where this money will be going. People who I spoke to that were part of the Solarium said that they had hoped for a little bit more money for the office, $25 million for each of the next 2 years, but they did say that this is a start.
Meantime, of course, we've had massive cyber attacks, some of the biggest in history just in the last 6 months. How is the budget responding to some of these attacks? Of course, President Biden has spoken out about them, expressed his concerns, but is there money to help?
Absolutely. So, Biden's first term has been absolutely characterized by responding to cyber attacks. He took office after the SolarWinds attack infiltrated U.S. agencies and companies. Then there was a China link hack that used Microsoft to target tens of thousands of networks. And then, recently, of course, there was the Colonial ransomware attack. So, he's really had to deal with a lot of cybersecurity incidents during his days in office. So the response in his budget is to allocate $9.8 billion for federal cybersecurity, which includes $110 million for the Cybersecurity and Infrastructure Security Agency, which is responsible for protecting government agencies and advising the private sector. The thing that some people say is that this is good, but, many in Congress or experts in the cybersecurity space were hoping for closer to $400 million more for that agency. So, again, they're thankful for the money, but looking to try to find more to appropriate in Congress.
As they say, it is a start. Bloomberg's Aliza Sebanius. Aliza, thank you so much for that update.
Thank you.
In other news, the electric truck maker and Tesla rival Rivian is a step closer to an IPO. The Amazon-backed startup has selected underwriters for a potential public listing later this year. According to Bloomberg sources, the company is working with JP Morgan, Goldman Sachs, and Morgan Stanley. Rivian could seek a value of as much as $70 billion when it goes public. And coming up, Bitcoin continues its pre-U.S. Memorial Day meltdown. We'll talk about all the volatility next. This is Bloomberg. Bitcoin slumped to near $35,000, back to the crypto meltdown levels of last week as traders brace for fresh volatility over the long U.S. holiday weekend. The drop adds to what has already been one of the worst months ever for the digital coin after Elon Musk criticized its energy consumption. To talk about this now, we're joined by Ian Rogers, Chief Experience Officer at Ledger, a provider of hardware wallets to consumers and customers who trade, lend, and borrow cryptocurrencies. Joining us now, Ian, thanks so much for being here. How are you seeing this activity, all of this volatility, play out at Ledger?
Well, for us, we make a hardware wallet that secures cryptocurrency, but we also have trading on the platform. So when there's volatility on this, we see a lot of trading. People going from Bitcoin and Ethereum to things like stable coins like USDT. And then back again when they think it's the bottom. So we see a lot of trading during these periods, like everyone else.
Are you concerned about the volatility?
Well, I mean, we watch it closely, but I mean, I think that if you're investing in cryptocurrency, it's a long-term game, right? So I think if you're buying Bitcoin or Ethereum and thinking you'll hold it for 6 months, then that's not what I would recommend. I think you've got to be looking at a much longer time horizon, 4 years or more, I think, to really be watching the asset appreciate. So I think, it's an asset that you buy and hold for a long time. And in many ways, the volatility is a feature rather than a bug. I mean, as Oscar Wilde said, the only thing worse than being talked about is not being talked about. So I think having this, be something that people kind of dive into and go down the rabbit hole, and ultimately, the story will either sell itself or it won't. And I think so far it's been selling itself for 12 years and it'll probably continue to.
That said, investors who might have been thinking about getting into crypto but were a little skittish are probably sitting this out. They're not necessarily buying the dip. What do you have to say to some of those folks, given that you offer infrastructure and security solutions for digital assets?
I mean, I would just encourage them to dive into it. I mean, and I don't mean necessarily invest. What I mean is do the research. Do the research and take a look at the story. I mean, personally, I'm yet to see an intelligent person, dive into this rabbit hole and come out unchanged. I think that, we're certainly going to, of course, the internet is going to have its own money, as Naval Ravikant said. The thinking otherwise is like thinking that the US Postal Service or La Poste here in France would be delivering our email. So I think there's a lot of questions around exactly what form that will take. But I think it's, without question that cryptocurrency as an asset class overall will grow for the foreseeable future. So I think that people should do their own research and take a look at the story and see if it speaks to you. And if it does, then it's something that you can buy and hold. Buy it an amount that you're comfortable with, but hold it for plan on holding it for 4+ years would be my recommendation.
So talk to us a little bit more about what Ledger does as, despite the volatility, more mainstream acceptance is happening, more companies, more events are accepting cryptocurrency as a form of payment.
Sure. I mean, so we make a hardware wallet that allows you to self-custody cryptocurrency, and then it's a platform from which you can interact with the world of cryptocurrency. So what that means is, you are the custodian of your coins or of your value. So instead of holding them at an exchange, you actually hold the private keys to your crypto, which lives out on the blockchain, in your hands. So you're not susceptible to many different kinds of risks that you would be in other places, be that a cyber attack or a company going out of business or any of those types of things. I think so what we do then on the platform is since we have the assets, we allow people to trade from the security of the platform. So if you own cryptocurrency, you want to be able to interact with the world of digital assets, but the risk comes at the moment that you make that transaction. So what we do is we give you a place from which to securely sign transactions so that that you're not making a mistake and there's not a man-in-the-middle attack that is that's giving you something other than what you expect, and allowing you to interact with the world of cryptocurrency, be that decentralized finance, NFTs, trading, buying, selling, staking, all from the security of a device and where you have the custody of the assets, which you don't on a trading platform or a custodian.
Interesting. All right. Ledger Chief Experience Officer Ian Rogers, thanks so much for breaking that down for us. We'll see just how volatile the weekend is. Thank you. Meantime, Apple is said to be revamping its popular AirPods for release later this year. It'll mark the first update to the product in more than 2 years. We're going to get more now from Bloomberg's Mark Gurman in today's Power Up.
This is Mark Gurman with Bloomberg Technology, and on this week's episode of Power Up, I'll be taking a look at the new AirPods and new AirPods Pro launching in 2021 and 2022. Apple is readying a revamp of its entry-level AirPods for this year and a second-generation version of the AirPods Pro for next year. The new base AirPods will mark the first update to the product since March 2019 and will add a new design that mostly mirrors that of the AirPods Pro. The earbuds will come with a new case and shorter stems poking out of the bottom of each one. The AirPods Pro coming next year will be the first change to that product since October 2019, and those will include updated motion sensors with a focus on fitness tracking. Apple previously aimed to release the new AirPods Pro as early as this year. The update to its wireless earbuds range will bolster the company's wearables, home, and accessory segment, which has grown rapidly to now account for more than $30 billion in annual sales, exceeding 10% of total revenue. The last AirPods-related hardware introduction from Apple were the over-ear AirPods Max headphones in December. That $549 pair earned criticism for bugs and its high price, but praise for its materials. Apple only recently caught up with demand for that product, and it is not currently working on a second-generation version of the AirPods Max. However, it is internally discussing launching additional color variations in the future. As part of its broader home, audio, and accessory strategy, Apple has also begun early development of a HomePod speaker with a built-in screen, as well as a device that combines the features of a HomePod speaker, Apple TV set-top box, and FaceTime camera. Competition for speakers with screens is already widespread. Last year, Apple released the HomePod Mini, and earlier this year, it released an updated Apple TV set-top box with a redesigned remote and a faster processor. For the new AirPods Pro for next year, Apple has also tested a smaller design that eliminates the stems. That look will debut on new Beats branded earbuds planned to be announced in June. For Bloomberg Technology, I'm Mark Gurman. This is Power Up.
Coming up, rise of the machines. Everyone is getting into this back game. We're going to hear from a surgical robotics company backed by Bill Gates, the CEO and co-founder of Vicarious Surgical, joins me next. This is Bloomberg. Vicarious Surgical, a surgical robotics company backed by Bill Gates and Khosla Ventures, among others, has agreed to merge with D8 Holdings, a special purpose acquisition company, or SPAC. The deal gives the combined entity an enterprise value of about $1.1 billion. The U.S. FDA granted breakthrough device status to Vicarious in 2019, making it the first surgical robotics company to receive that designation. Joining us now for more, co-founder and CEO Adam Sachs. Adam, thank you so much for joining us. So you claim to have a novel and human-like approach to your robots that perform these surgeries. Talk to us about how the technology works.
So our technology is incredibly unique in the way the actuators themselves work. So with every other surgical robot, they're all built on either legacy technology that has what's called coupled motion, that limits the motion between the joints and actually causes motion and force coupling between each of the joints, or flexible robots, which have incredibly low forces and are far too large for a lot of surgical applications. So with these decoupled actuators, we're able to put far more motion inside of the body. We put wrists, elbows, and shoulders, giving the surgeon full motion all through a single 15-millimeter incision.
So talk to us about the demand you saw through the pandemic. I assume there was great demand to have robots in the operating room if they could replace a human. And then how does that evolve post-pandemic, given there's been a push towards this generally, but obviously there's not necessarily the need out of a pandemic?
Yeah, so I think overall the field of surgical robotics has had, a pretty good amount of demand, as you noted, but there's been demand for a long time to exceed what a surgeon can do with their own hands. Surgeons, put a ton of time and effort into not just training on what they need to do on the organs, but actually training on how to use the tools, how to learn the techniques, how to overcome the challenges and limitations of their limited access to the organs where they want to operate. So our device and our technology greatly expands what the surgeon is actually able to do, all while causing far less injury to the patient. And that's why the FDA, as you noted, granted us a breakthrough device designation. So we expect there to be significant demand for better quality of care while injuring the patient less for a long time to come.
You worked at Apple on iPhone manufacturing back in the day. How have you applied what you learned at Apple to Vicarious?
Yeah, so both myself and actually our CTO, Sami Khalifa, and co-founder worked at Apple. Sami worked on iPhone product design, focusing on a lot of those small mechanisms that have become incredibly relevant as we design tiny mechanisms inside of our robotic arms and actuators, and he leads our entire R&D effort today. In my experience with operations and manufacturing and high volumes has really helped us more than anything focus over the last 7 years that we've been inventing and developing this technology to bring it where it is today on cost, manufacturability, and sort of a practical approach overall.
Why'd you choose the SPAC route versus the other options out there?
That's a really good question. So I think there's sort of two questions in that, right? There's both why go public versus stay private, and why SPAC versus traditional IPO. From private versus public perspective, I think it's a pretty easy choice for us. We're incredibly excited to be a public company. It gives us the level of visibility and the ability to be transparent with everybody, not just potential investors, but also future customers, employees, as we grow our company significantly with this transaction. So we are really excited to have that visibility that comes with being a public company. From a SPAC versus traditional IPO standpoint, I mean, we are pre-revenue today. And I do believe, SPACs have a very unique place in the world that is especially valuable especially valuable given the background of technology that we have in the 7 years of development and their ability to come in and validate that and do diligence on it.
Fascinating. Well, we'll keep our eye on you. Vicarious Surgical co-founder and CEO, Adam Sachs. Thanks so much for joining us. All right, coming up, the pandemic has changed the face of education, but what can students and parents expect as we approach the other side of this? I'm speaking with the CEO of OutSchool next about how his platform is aiming to make remote learning part of the future for good. This is Bloomberg.
We're really excited about not only the strength of our organic business, but also the opportunity to bring together Slack, which is really the digital HQ for this all digital world, together with that customer 360. And we think the opportunity is just incredible.
Welcome back. That was Salesforce co-president and COO Bret Taylor after reporting better than expected first quarter earnings results. For more on earnings throughout the week, let's bring back our Bloomberg Markets reporter, Kriti Gupta in New York. Kriti?
Well, Emily, let's just start off with those Salesforce earnings because we did actually see, in notable contrast to the other earnings stories, Salesforce in the green, posting pretty good to strong profit forecast that topped even the highest analyst estimate. But like I said, that story did not go through in the likes of Dell and HP. Strong earnings there too, but analysts saying, investors saying actually, that perhaps those sales have peaked. VMware as well, following that Dell lead. But the analysts there, a little bit of a different story, saying that, well, in the long term, that spinoff from Dell could actually be a pretty good story. So that's the micro story. Let's just take a broader step back, though, and talk about the first quarter earnings surprise totally. Because when we're looking at technology, you have it kind of split into three different sectors. Technology doing pretty well in the middle, but the real outperformance was right up top in that consumer discretionary sector. That's where you have your retailers, but that's also where you have Amazon. I also want to bring to your attention communications right in the middle. That's where you have your Facebooks, your Twitters, your Googles. All in all, tech having a pretty good day, but retailers doing even better. So that really does bring this idea of the reopening theme back to the forefront. Let's revisit that stay-at-home theme, though, in the likes of Zoom, for example, one of the hottest stocks in 2020, you can start to see that sales growth starting to get projected lower and lower. Is that stay-at-home trade dead? Can Zoom really come back? Emily, we'll find that out next week.
Speaking of Zoom, let's talk about Zoom School. COVID-19 has changed the face of education over the last year, with schools and parents having to navigate a new normal amid the pandemic. But as the virus begins to wind down in the U.S., kids are out of school for the summer and parents begin a return to the office, and that is leaving many with some logistical challenges over the next couple of months and a load of questions for the fall. The CDC tried to clear up some of these concerns with its latest guidance today on summer camps, making the statement that where everyone is fully vaccinated prior to the start of camp, it is safe to return to full capacity without masking and without physical distancing, though, of course, many kids still not vaccinated because they're not yet available. Joining me now for more, Amir Nathu. He is the CEO at OutSchool, an ed tech company focused on disrupting education with distance learning. Amir, thank you so much for joining us. I know as a parent, OutSchool has been an incredible resource over the last year, basically offering school on Zoom from science to art to coding to Minecraft. Talk to us about what demand has been like over the last year and how that changes when schools are back in session.
Well, firstly, Emily, you can, as you might imagine, with the pandemic and schools having been shut down and needing to lock down, there's just been incredible demand for supplements to school that can be accessible remotely over Zoom. And so we offer live online classes for kids in small groups, and we saw demand for our classes rocket 2,000% last year. And we've seen that parents continue to come to the site and to want supplements for school because things aren't entirely back to normal, number one. And number two, as we enter the summer, all the usual concerns about how can we occupy our kids' time in a valuable and safe way come to the fore. And for most families, only taking in-person summer camps just isn't an option because of cost or availability. So we're seeing that there's continued persistent demand for supplemental online classes. We expect that to continue because the new normal isn't going to be the same as the old normal as people have learned and adapted their habits in the wake of the pandemic.
So let's talk about the new normal, because you say that traditional schools, as they've been operating for the last couple of centuries, are missing the mark on creativity, and that the future of learning should be blended in person and online and offline. Talk to us about what you mean by that.
So I believe the future of education will be hybrid, and hybrid in two senses. Firstly, it'll be a combination of online resources with traditional in-person learning, and hybrid in the sense of a combination of core curriculum along with enrichment and supplemental activities. And one challenge in the past for schools is carving out the time and the budget to really offer extensive enrichment classes. And one of the opportunities that online learning presents is the ability to access a far wider range of teachers and topics than could possibly be available locally. And so, that opportunity is now, meeting that problem, and interest-based learning and enrichment classes are increasingly in demand because of the demands of the modern world. Parents don't believe that it's enough to simply have your kids, get great grades in school and get a great college degree, and that's going to set them up well for the future. There's so many other skills and interests and parts of the world and the economy that are emerging that are unpredictable. And interest-based supplemental learning really can fill that gap and help kids develop differentiated skills for the modern world.
OutSchool is now part of a new generation of ed tech unicorns. I know you recently raised money at more than $1 billion valuation. I want to talk a little bit about the summer because there's still a lot of parents out there that don't have a lot of options this summer because we're in this sort of messy middle time. There's some summer camp, but not enough. How is OutSchool helping there?
So we have a range of offerings this summer. We have more than 100,000 classes taught by 10,000 teachers. And these classes are, starting right now. You can come to our site and arrange a camp for your child starting, tomorrow, and fill time very dynamically so that you can have your kids, occupied and interested in learning in a very dynamic way. And there's a lot of uncertainty this summer because of both, how we're emerging for the pandemic and how that's different in different parts of the country, and how parents have access to different resources. In some places, there's not much availability of the traditional in-person camps simply because those businesses and those groups have been hit so hard with the pandemic. So OutSchool can be a great supplement to fill those gaps given the uncertainty. And another thing that we've released is a new initiative to allow employers to provide OutSchool classes as a benefit for teams, and so that working parents can have access to summer classes on OutSchool for their kids. And that's really, really important because especially working mums have been severely impacted by the pandemic and trying to juggle both work and now taking care of the kids for the summer. And so employers are able to use OutSchool in that way, and companies like Twitter and the NASDAQ are offering OutSchool as a benefit. Additionally, we've also
absolutely. I know that you have this new B2B offering where you are companies are offering the benefits of OutSchool to their employees, and I wonder. I'm also worried about women backsliding in the pandemic because they're taking on a greater share of childcare and schooling. But do these benefits for OutSchool continue when we come out of a pandemic?
Well, what we're seeing is a shift generally in how employers are approaching benefits. And we don't see any backtracking from that. If anything, we see a doubling down on it because of increased awareness about the issues that working parents and in particular working mothers face. So we actually expect that part of our business to increase rapidly and are investing heavily in it based on the trends that we see.
All right, Amir Nathu, CEO of OutSchool. Appreciate you taking the time to join us, and we'll be watching how the program evolves. All right, coming up, it pays to play. We're taking a look at the wealth gap and why so much more money is going institutions like Harvard and Yale versus historically black colleges and universities of the same size, and how venture capital and startups might be able to help. That's next. This is Bloomberg. A class action case against Google over alleged gender pay disparity set to go ahead. A San Francisco judge has ruled the 4 lead plaintiffs representing almost 11,000 women can proceed with their case, which could go to trial next year. They claim Google pays men more for doing the same job. The company says it's worked hard to not do that and over the last 8 years to ensure pay equality. Turning now to endowments. Endowments have been part of the history of universities and colleges across the U.S. for centuries. And when we think endowments, we typically think about Harvard, we think about Yale. But what about the rest of America's schools, specifically historically black colleges and universities? Today, the average endowment for a student enrolled in an HBCU is around $15,000, whereas the same endowment for a student enrolled in a non-HBCU of the same size is a whopping $410,000. Joining me now to discuss the disparity in donations and what they're doing to tackle the issue is Adeyemi Ajo, Base 10 General Partner, and Marcelia Freeman, Florida A&M University Foundation Board Director. Ade and Marcelia, thank you so much for joining us on a very important topic. So Ade, I want to talk to you first about this fund and how it works, because you're basically helping HBCUs invest in startups, then donating part of the returns back. Talk to us about how it works.
Thank you. Thank you for having us here, Emily. So you are correct. What we're doing with the Advancement Initiative is partnering with endowments of HBCUs and foundations in order to invest in some of the best private technology companies, and then donate 50% of all the profit that we make from those investments in order to grow the endowments of HBCUs and to endow scholarships for HBCU students.
Now, Marcelia, when you and others at Florida A&M, look at Silicon Valley, see these unicorns going public, see these investors making a lot of money, what have you thought to yourself about how to potentially participate in that kind of wealth creation?
Yeah,
Absolutely. It's a great question. So I think we at Florida A&M believe in a diversified portfolio. But at the same time, historically Black colleges and smaller universities, smaller endowments typically haven't had access to venture capital because we can't write the big checks. And so we've typically accessed venture capital through a fund of funds. We have, not been incredibly active over time, but right now we're probably at about 2% of our allocation towards venture capital with a target of 4 to 5%. So we're in the game, we're trying to play the game, and we're trying to get access to great managers like Base 10 who have access to great entrepreneurs.
Now, Ade, some folks have looked at your fund and said that it's risky. Why is that?
Because venture capital overall is a very risky industry. About 50% of venture capital funds lose money after fees. And there are very, very few companies and funds, about 5% of them, that make for 90% of the returns. So the question for anyone investing in venture capital, as Marcela said, is can we access the very top? Can we access the very, very best companies? And the good thing is that what we have found with this initiative is that the very best CEOs really care every day even more about diversity and making sure that the success of their companies benefits the communities that they want to serve. So we have found that in a couple of months that we have been live with this fund, we have been able to partner with now 9 of the very top private technology companies.
Marcelia, why invest given the risk? Are, investments like this appropriate for colleges and universities with small endowments?
Absolutely. So as you know, endowments are long-lived portfolios, right? So it's not necessarily important for us to put all our capital in liquid investments. And so we can take a portion of our portfolios and invest in riskier items. I would say that if you look at the consensus of economists, they believe that we're going to have the biggest growth spurt we have had as a country in the last 70 years. In the next couple of years, we want to be a part of that, and we don't just want to play it through a manager that invests in stocks and bonds. We want to be able to participate in venture capital because that really is kind of the growth engine of portfolios like the ones that you just showed on the screen, Harvard, Yale. These portfolios, while they are well diversified, have had a good portion of their investments in the private opportunities that smaller endowments have typically not had as much access to.
So Ade, talk to us about some of the startups who participated in this. Brex, Plaid, Aurora Solar, Attentive, Wealth Simple, Keep Trekkin', Circle CI, Nubank. How eager were they to have HBCUs as investors?
So I've been investing in Silicon Valley startups for about 10 years. And I have to say that I have never seen this level of eagerness. In most of the conversations with CEOs, within 5 minutes, the reactions were things like, wait a minute, you are going to invest in us, and together with those profits, we're going to create scholarships for HBCU students. This is a no-brainer. Where do we have to sign? And we think it speaks to something that we believe at the Correct Base 10, which is that the companies that are going to perform best are the companies whose leaders really want to make a positive impact in the world. So for all 9 of our partners, they went above and beyond. They all had oversubscribed rounds, about $5 to $10 for every dollar they wanted to raise. And they said, I'm going back to my investors right now, and I'm telling them that we are partnering with you because we want HBCUs represented on our cap table, and we want our success to benefit HBCU students.
Now, Marcelia, it certainly seems like there's more to this than just generating more wealth, more money for HBCUs. It's about creating access to diversity in technology in a repeatable way. Can you talk about some of the longer term, bigger ambitions with this fund?
Absolutely. So, part of us investing in Base 10 is about their access and about their track record. Check, check. They've got that, and we're really excited about it. The other part of it is their structure. So they have created a structure that I hope others will adopt that will create an opportunity to reinvest in Florida A&M University, and then also support our endowment by not charging us fees, by reinvesting part of their profits into our portfolio. But I think, those things, structure, access, track record, are, the more tangible, diligenceable items that we're really excited about. The other piece of it, which I think is equally exciting and is the absolute cherry on top, is their impact to our ecosystem. Their ability to go into our student body and support students in STEM, in engineering, in business, and offer internships. Support them after they graduate by, introducing them to the world of venture capital and technology, and supporting them as they go to look for full-time jobs. And then last but not least is their ability to generate strong returns for our portfolio, which will generate an ability for us to give more scholarships. So it's a self-perpetuating engine, and I'm super excited about all the tentacles that Base 10 will have in the Florida A&M ecosystem.
It's a really incredible and really unique approach, and I'm excited to watch how it plays out. Marcelia Friedman, Florida A&M University, and Adeyemi Ajo, Base 10 General Partner. Thank you so much for joining us and talking to us about how it all works. Okay, coming up, Amazon faces a new antitrust lawsuit over pricing. More on the e-commerce giant's way of dealing with controversy next. This is Bloomberg. Amazon is facing more and more scrutiny as warehouse workers demand higher pay, and state attorneys general build an antitrust case against the e-commerce giant over pricing. I sat down with the author of Amazon Unbound, our very own Brad Stone, to talk about how Amazon may weather these many storms.
The truth is complicated, and there's probably not a singular truth. I mean, this is a company now that employs 1.2 million people. You find pockets of discontent and happiness everywhere you go. And in Bessemer, Alabama, unless that verdict is overturned, employees there voted against a unionization attempt. So, look, the life of a worker in any warehouse, and particularly in a fulfillment center, is not easy. They are measured by algorithms. They are sometimes fired by algorithms. The company does a lot of things to ensure that if people are stagnating, they leave, right? They're put on performance improvement plans, or there are no raises after 3 years. And so in some ways, it's not a very empathetic arrangement. But it's, as I said, it's complicated, and there are parts of the world where the economic reality is so dire that actually a $15 an hour wage in an Amazon fulfillment center is a comparatively good occupation. And so, look, I mean, I think there are plenty of ways in which Amazon can improve, and Bezos has finally acknowledged that and says he wants to devote more time to it. And at the same time, probably lots to gain from employees banding together and maybe successfully bargaining collectively.
Well, and it's not just lawmakers, it's not just employees, it's the sellers themselves, which is part of what this new antitrust suit is based on. There's a huge conflict between how, obviously Amazon enables all of these small businesses to reach the world, and yet sellers complain that, they're forced to offer the lowest prices on Amazon, even lower than their own websites. Right. What are the problems that you see? Because you went back and you talked to some sellers who 5 years ago were singing Amazon's praises.
Right. Yeah, let me explain that. So in lieu of an overarching poll that measured the sentiment of Amazon sellers, which it was really hard to do, I thought I will go to all the sellers who Bezos mentioned in his investor letters over the years. And almost to a one, they were really disgruntled by how things had turned out and had moved largely off of Amazon. And I think what that shows is the Amazon frontier, the e-commerce playing field, but in particular Amazon, is almost in turmoil. It's changing all the time. The playing field is increasingly tilted in favor of overseas sellers with lower cost bases, Chinese sellers close to their manufacturers, and it's really hard to compete. And that's a reality and a bitter one, I think, for a lot of sellers, and one that Amazon, I think, has gone to great lengths to obfuscate in their messaging and in some of their internal marketing to sellers. But look, I mean, you sort of asked about what are the anti-competitive elements there, and I think there are a number of things they do, like the price parity provision that the DC AG is calling out, where Amazon is insisting that sellers sell at a lower price or an equal price on Amazon as elsewhere, that the company's gotten so big that really deserve more attention. Amazon's going to defend it, but look, they could also walk away from it, and it probably doesn't hurt their business all that much.
The author of Amazon Unbound there, our very own senior executive editor of Global Tech, Brad Stone. And that does it for this edition of Global Technology, Bloomberg Technology, which is global. Wall Street Week is coming up next. My colleague David Weston talking to Dimensional Advisors David Booth about how investors should prepare for the prospect of inflation. This is Bloomberg.